What is up, guys? Taiki here, and in this video I'll discuss how I made $18,000 in the month of May yield farming on the Polygon Matic ecosystem while the entire market nuked. If you like the content, please like and subscribe and leave a comment in the comment section below. None of this is financial advice, so let's get started. So if you've been following my channel, you know that I've been going ham yield farming on the Polygon ecosystem. So just to prove to you that these numbers are real, I'll kind of give you a journey on how this came to be. So I took the screenshot last night, but 36 days ago, that's late April, I deposited 2.5 Ether to the Polygon, right, via the bridge. And 31 days ago, I deposited 3.75 Ether. This is early May. And the price of Ether, if you multiply like the 6.25 Ether with the price of Ether back then, that was roughly $17,000. And just to have like video proof, I guess, this was my very first video on, or one of my first videos about the Polygon Matic ecosystem. And the date of this video was April 30th. And you saw that this is $7,000 of USDC. And that was the farming, so I have like extra funds there too. And you can see that I'm a total noob, right? A month ago, I was a total noob. Like, look at this shit. Like, I'm literally using light mode on Aave, right? Luckily for me, 10 days later, when I have 17K of dollars, I converted my Ether that I bridged to dollars. I turned on dark mode, thank goodness. But, you see that, I made some trades. I like caught some multiples on QuickSwap and I was yield farming. So you see that like my balance 10 days after increased by, $8,000. And the reason this is all possible and the reason these yield farms are successful is because of these things called liquidity mining incentives. If you don't know what liquidity mining programs are, just think of these projects and blockchains and decentralized applications. They want to incentivize users to come onto their platform, right? They want to incentivize you to, put your liquidity on there because, that's how they make money and that's how they grow as a project. So to reward early users, these projects will just give you tokens, right? They'll pay you to use these platforms. And that's what I guess the partnership between Polygon and Aave did. There was a $40 million liquidity mining program, which will last until April of 2022, right? The rewards are kind of front loaded, so it will go down over time. But, these rewards are going to last for, the foreseeable future. So just to understand how powerful this is, I want you to take a look at the red box area, right? So on May 9th, I was borrowing $16,000 with a Tether, and I was paying a 6% interest rate to borrow those dollars, right? This is an interest rate that I'm paying to the bank. But under it, you see that the little Matic icon and the 16.6% APR, right? This is the Matic rewards that, Matic is paying you to use Aave on the Polygon ecosystem. So if you think about it, I have my assets deposited as collateral, which is earning me interest, and I'm borrowing against it while still earning interest, still earning yield, right? So this is yield on yield on yield, and over time, this adds up, right? I mean, on every single, on any given day, like you'll earn like a few Matic tokens or 10 Matic tokens, which might not seem a lot, but if you think about it, like over a span of weeks, months, if you take that Matic and redeposit it on Aave and put it as collateral, you're hyper compounding your Aave, and you can take more as collateral while being paid to do so. So this is what I've been kind of doing. And Aave isn't the only Polygon application that's like has these liquidity mining incentives. Curve also has them, right? So if you're like a DeFi native, you know how powerful Curve is as well. And right now the base APY, right? So if you deposit dollars on the Curve, you earn 3.4% and 20% paid in Matic token. A month ago, this was like 8% base APY and like 40% Matic. But as you can see, as these yields, like as these yield opportunities, I guess, grow in popularity, more and more money, more and more people just pile onto these opportunities, and the yield goes down. But I mean, if you compare this to like whatever you're getting in a bank, it's amazing, right? And the majority of my gains I got was through this thing called degen yield farming. I have a whole playlist on this, so I'm not going to go over like the nitty gritty of it. But if you think about like the environment in like, I guess, early to mid-May, we were like fully risk on, right? Like ETH was hitting like $4,500, Matic was at $250. So, for, I guess, since late April and mid-May, my focus was just to accumulate Matic, as much Matic as I can. And I was able to, de-risk near the top and convert into dollars, which I guess gave me the opportunity to, I guess, grow my collateral position, like, which is like dollar denominated. And this is like what my Aave position looks like right now. As you can see, it's at 35K, and when I started at $17,000. And if you think about it, this is very, very powerful, right? because what I was able to do was when the entire market nuked, right? So for Bitcoin, like the monthly candle was minus 35%. While the entire market nuked, I was able to return over 100% return on my portfolio. Now, don't get me wrong, this shit is not sustainable, okay? I am probably not going to get 100% returns per month in the foreseeable future. But, I did it. I mean, I'm a living testament for like a successful yield farmer that primarily yield farmed using stablecoins. So I think this is very, very powerful. And if you think about it, a lot of the TA guys that I know and respect, so for example, Crypto Don Alt, the duck, he kind of called this entire crash. He kind of de-risked Bitcoin from like $62,000 when the Coinbase listing like didn't gigamoon the market. And he expects the market to just move sideways for a while, right? In his words, a crab market. Like, he just goes sideways. And people get uber bearish around $32,000, saying we're going to go down to 20K. But as soon as we approach 40K, everyone on Twitter is like, yeah, we're a V-shaped recovery, yada, yada, yada. Like all these like bullish propaganda and bearish propaganda to get engagement. But if you think about it, what if the market goes sideways for a while? Like, wait, would you be surprised at all, right? Let's say in the next 3 months, we just go sideways, right? We consolidate and give people the chance to accumulate Bitcoin and other altcoins. Would you be surprised? Or what if the market just goes down, right? In that type of environment where we either range or consolidate or even like go down a little bit more, who do you think will outperform? It's going to be the stablecoin farmers. I think this is a perfect environment for stablecoin farmers, because if we do range, right? If we consolidate, go sideways, or if we just go down, like which is a possibility, I think stablecoin farmers will outperform because we're using our dollars, right? Which limits our downside, like limits our upside, but limits our downside to generate yield. And when the markets are bullish, we can use those dollars, we can deploy those dollars to buy like our favorite tokens. But I argue that this might be the perfect environment for stablecoin farmers like myself, because some traders, right, that like buy into this like up only narrative, like 5x leverage, they might get liquidated, they might get pissed, and they might be applying to McDonald's, right, for like the 17th time. But stablecoin farmers like myself, I'm just sitting comfy in my farm, and even if a storm does come, right, if a black swan event hits again, like China bans Bitcoin, like whatever, I'm protected to the downside. Because think about it, stablecoins kind of act as insurance to your portfolio, right? Because you limit the downside. Because we are farmers. Bum, ba-dum, bum, 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 bum. And the only thing we need to worry about is like supplies, like rakes and hoes, right? Like, can Amazon deliver this shit to me? And whether or not our seeds are organic, right? Because the market loves that shit. And for me right now, I'm like focusing on stablecoin farming and just like farming and harvesting some good old cabbage. Yeah, it smells organic. I'm sure it tastes good. And you don't have to take risk. You don't have to be 100% hits long crypto to make it in the markets. There's nothing wrong with raising cash, farming, and collecting some cabbage, right? Nothing wrong with that. All right, jokes aside. So I'll just share what I've been doing recently. I went over this in the live stream, but I'm sure not everyone has a chance to sit through an hour-long live stream. So I was gonna give a quick update on what I've been doing. So I think the market is bearish, right? Like you can't deny that. So I think that in this type of environment, these DGen yield farms will not perform that well. Don't get me wrong, there are yield farms that like are making people money. Like there are people in the Discord that's like making a lot of money. But for me personally, like I have a lower risk tolerance, right, compared to some people. So I'm entering safer farms to accumulate speculative coins. So what does this actually mean? So let's actually go over my Aave and like what I've been doing. So roughly I have $35,000 in this portfolio. And like Aave is like the bank, right? It's like my checkings account for my farming portfolio as of now, where 2/3 of my portfolio is in dollars, right? Stable assets. And, then I have like 0.2 Bitcoin, and Bitcoin is the least volatile asset. So I like using like less volatile assets as my collateral because I don't want to get liquidated. I know a couple of friends that got liquidated on Aave during like the 50% crash to 30K, and I'm sure that was painful. I don't want to deal with that, so I'm just borrowing stable assets, and I'm borrowing stable assets, and my collateral is also stable assets. So I've been focused on farming speculative coins. So these are not tokens that I'm farming and dumping. I'm just farming to accumulate in case they go up. I have no idea if this will go up. But for example, I farmed almost 900 Chi tokens, right? And don't get me wrong, I have no idea if this thing will go up, right? If this goes to 0 tomorrow, I will not be surprised. But I farmed this with stablecoins. And if you don't know what QDAO is, it's a MakerDAO fork where you can essentially, right now you can put your Matic as collateral and borrow stablecoins against it for a 0% interest rate. And the only way they make money is through these repayment fees and deposit fees. And in the future, they said that they might allow more types of collateral, such as like Link and Sushi, which, okay, so I'm thinking to myself, okay, like this could work, right? Yeah, I mean, this thing is under a $10 million market cap. And if it goes to $1 billion, like that's 100x. I put the percent likelihood of that happening at like 0.2%, or like, like very, very low chance. Like this thing can go to 0. But, it's a speculative bet. I don't want to buy this with my own money, so I'll just farm it with dollars, right? So that's what I've been doing. So that's what I did 3 weeks ago. And now what I'm farming is something called DFYN, which is a multi-chain DEX. So they have a pretty neat website. The concept is that, this is a decentralized exchange that lets you trade between different blockchains. So that if I can take my Polygon on Matic and buy something on the Avalanche blockchain, for example, or Solana. Yeah, you can see it here. Yeah, BSC, Polkadot, Avalanche, Solana. Like I have no idea like if this will work, right? It's a speculative bet, but and like I don't want to use my own money to buy these assets, so I'm just farming it. And they have investors too. So if you go back to my Aave, I'm borrowing DAI, right, and USDT. And I'm using these borrowed assets to provide liquidity on DFYN. So as you can see, I'm earning like 7.5 DFYN a day, and I get to do this for the next 21 days. I have 54 now. I'll probably do this until I hit like 100 or 200. And right now on this DAI USDT pool, I'm earning 76%, right? And like I said, I have no idea. I'm not shilling this token. I have no idea if this will go up or not. But I can see it working, so I'll just accumulate them with my stablecoins. And it's cool because I'm being paid to borrow here anyways, right? I'm being paid to do this, so I'm borrowing money, being paid to do so, and then providing liquidity, which I'm just accumulating free token. That's cool. And I guess for advice on newer people, like you don't have to like do complicated things like providing liquidity. If you're new to DeFi, I suggest like just using Aave, right? Like learning how these decentralized borrowing and lending platforms work, or just like maybe just deposit into Aave, right? Not Aave, Curve. I talked about it. You can literally take dollars, stablecoins, throw them in the Curve and earn 23.5% APR or APY. I mean, that totally beats the bank. That being said, I have a whole playlist on like all the things you can do on Matic. I'm sure like the content here is pretty good. And the great thing about Matic is that it's a great place for people to experiment because transaction fees are essentially near zero. There's this website called matic.supply, the Polygon faucet, which will allow you to, up to 3 times a day earn 0.001 Matic, which can allow you to do 100 transactions on the Polygon network. If you're using Ethereum, it's really hard to experiment because things are so expensive. But on Polygon, you can just like do a bunch of transactions for essentially free. So if you're new to DeFi, I always recommend newer people to deposit some, like a little bit of money onto Matic, like learn, like I guess like experiment. And as you become more comfortable, expand to these other yield opportunities, such as like right now I'm providing liquidity on DFYN. I have a video on how to do this, how to be a liquidity provider on SushiSwap, which is $500, earning like 20% APY. So there's lots of resources out there, and there's a lot of things you can do with your dollars. So if you want to make it in crypto, you don't have to be tits long crypto. You don't have to be 100% crypto, diamond hands, like buy the dip, never sell. Like sure, you can do that, and like you can probably make money, if you have a long enough time horizon. But if you want to take a more pragmatic approach to markets, why not raise some cash and stablecoin farm with it? Because if we are in a sideways market, you will be outperforming the majority of the crypto influencers out there. If you like the content, please like and subscribe, and leave a comment in the comment section below. Thank you for watching, and have fun farming.